Hey everyone, so I made a video there yesterday, the day before. We try and bring it up. The day before, talking about Aster. Everyone was obviously talking about it, and I said, look, FOMO was going to jump in on me, and I thought, hell, I'm going to buy it. So my initial thought process, obviously up here, was I wanted to buy the token, but where things change and where my approach changes now is where I tend to focus on yield farming. And as I mentioned in that video, is how I actually yield farm and why the reason behind it. So where are we going to? So over here, I discuss more about this in the community and the reasoning, I suppose, behind it and the key things like that. So if we jump over here again to the Aster chart, you can see here I have the price points marked out. This is my current range. You can see I'm already getting close to the current range, $1.70, and I initially invested $1,000 into this position, and obviously, like crypto and at times when you seem to touch it, it goes down. This approach I made was not for passive income. It wasn't for anything. I wanted to get the token. However, I had a feeling I was buying it wrong. And obviously, instead of just listening to my gut, I said, look, instead of buying it now, I'm going to yield farm it. So I started yield farming. If you put $1,000 into this now, I'm down, would have been down 21%, I think, or something like that. Where is it gone? Yeah, so just say 20%. I would have been down 20%. So that's $200 gone straight away, wiped off the top of the board for me for capital. So that brings me down to $800 straight away. Now, obviously, because I decided to yield farm this, so you can see over here on PancakeSwap, I have the position obviously set up, Aster USDT. This originally was obviously $1,000. Obviously, we're down now to 863. But the key thing here to remember, and I suppose straight away people are not familiar with this, is if I just bought a token and that was my overall plan was wanting to get the token, I would have been down to $800. Now, obviously, yes, you're still down no matter what way I look at it. However, the key here is to remember is also I've earned a little bit of fees for buying the token and for farming it. So that brings me up closer to the $900 overall position. Realistically speaking, I'm down $100. Now, some people will question, okay, reason for impermanent loss, everything like that kicks in. And I understand that, but I think the most important thing is if you have a plan, if you have a strategy in place for why you're wanting to get into tokens, I think that is vitally important. So for me in this scenario here, if I go out of a range which is 169, and I think I have it marked roughly at a 170, a little bit above it, I am going to be out of range. End of story. I'll be 100% converted into Aster token. And again, am I happy with that? Obviously not 100%. However, if I bought the token up here where I was going to buy it, I would have been 100% in the token anyway. Simple and straightforward. And again, the reason why I got into the position in the first place. Now, I do feel Aster can obviously retrace, can have a pump back up again, and this can go extremely high levels, I think, personally. Again, it could go, $7, $10, $15 in value. But I wanted to make sure that I can get into a position safely. Again, I'm absolutely shocking at trading. I'm not able to trade. FOMO in, FOMO out of trades constantly. And this approach has served me over the last probably year and a half of when I'm wanting to buy into tokens of how I can do it. And I think this is obviously one of the key ways. So I go out of range to the bottom. I'm still going to be down. However, the key benefits here now is if I'm out of range here, I will also be after earning some fees, extra fees along the way. This can offset a little bit of the loss. Yes, in theory, it is better to buy down here if you knew the price was going to go down here. Again, I don't know where the price is going to go. So, as I said, this is my kind of next best strategy for actually how I get into positions. So, like as I mentioned, quick recap, I suppose. I got into it up here into yield farming. If I just bought a token and held it, I'm down $200. But because I bought a token and got into a yield farm position, I bought some of my tokens up here, some down here, and the whole way down I converted my stable coins to buying it, which in turn allowed me to kind of generate $37 worth of fees on top of the overall liquidity. You can see here at the moment I'm weighted heavily now, obviously, in the Aster token. Again, if we pump up again to whatever the price is, if I go out of range and I just hold these Aster tokens and the price pumps up, this will be worth a little bit more. If I stay within my range and my yield farming position, it will start to sell these on the way up again for me as it did buying them. Overall, getting me back to an overall value of liquidity of $1,000. But in turn, what's going to happen is my unclaimed fees hopefully will just keep increasing and generate more and more fees while I'm in the range at roughly whatever 900% APR, which is extreme. This position here is my ideal position of what I want to hold. these are the tokens I'm wanting to hold and obviously build a position. If I can build this through on-claim fees, it'll be ideal. I could convert USDT also into the token as well and just keep compounding and growing this position from that point of view. But again, once you have a plan, once you have a strategy, I think this is where big things you can start to do with your overall crypto portfolio. So again, look, if you're interested to learn more about the group, click over here. The link should be down below in the description. You can join into it, and we can really start pushing things forward. So look, I'm going to leave it there. Thanks very much for watching, and hope everyone has a great day.